Hey guys, welcome to the Treasury Update Podcast Coffee Break Sessions, the show where we cover foundational Treasury topics and questions in about the same amount of time it takes you to drink your coffee. My name is Alexa. I am your host and a consultant at Strategic Treasurer. And today I have with me Stephanie Villatoro, a senior consultant also with Strategic Treasurer. Hi, Stephanie. Welcome.
Thank you, Alexa. It's good to be here.
So today we're going to take a look at bank fees and kind of discuss what they are, why they're important, and just, I guess, how they're managed. So if we want to just jump right in, Stephanie, what are bank fees?
Bank fees are typically like an invoice or a utility bill. So what you utilize at a bank, from products and services, from information reporting to account maintenance, to your wire payments and EFTs, those are all translated into a fee per transaction and some maintenance costs. So it's really like a utility bill of paying your electric bill for usage. You're doing the same with your bank.
Okay, that makes sense. So then I guess, why is it important to manage or keep bank fees on your radar?
So is every invoice out there that you get today that you're paying correct? No, not really. So that is the main reason I would say that people would look at their bank fees, and that is the operational look at it. There are two reasons why you look at it, operational versus a strategic reason. So operationally, you're looking, one, to make sure you're charged correctly to your contract if you have one. Another is looking at different services from a strategic standpoint. What services are you utilizing most? What services are maybe underutilized that you maybe need to change? And are you duplicating services? Are you paying for information reporting on the web through an internet portal, but you're also getting file transmissions? Do you really need both? So looking at how you're using your services.
Okay, to avoid any duplications or anything like that. And that also just kind of makes me think it almost gives you a look at the share of wallet too, if you have, banks to kind of manage.
Yes, that's getting more into that strategic view. You're looking at your overall fees by bank, not necessarily looking at just the individual invoice.
Okay, right, against any contractual obligations. So how do we get these bank fees in order to manage them?
So there's various methods of getting it. Most people know the one, which is the paper statement. It's a paper invoice detailing out everything that you utilize for the month against the price and then the total fee. So that's the paper statement. You can also get those electronic typically on your web portals. You just download the PDF statement. Then there's also electronic. So if you're utilizing either a treasury management system or a software type system for account analysis where you upload to do that contract review, those would get a file transmission. And there are 3 different types of file transmissions you can get. EDI 822, that is US-based, your 2 international are a CAMP T086, and a twist file.
I guess to just high-level recap that. So bank fees are really something that can be looked at like a utility bill, right? It's your invoice, or it's the activity and the usage of all that bank activity every month, quarter, year. It's important to manage these so that we're keeping, I guess, the bank's honest, because like you said, invoices they're not always accurate. So we're really just managing this to keep it accurate, make sure it's meeting the contractual obligations, almost from like a services or a strategic standpoint too. And then there's a number of different ways to get these bank statements. So they can be paper invoices, they can be retrieved via bank portals, or they can come in an electronic file format, whether it's into a TMS or some sort of software service for that management. I think that's everything we've covered so far. Are there any final thoughts or anything you want to add?
Yes, just some final thoughts. Like we said, that you should review every invoice that you're paying. Bank fees are typically debited from your account, and they're net against any earnings credit against the fees. So any interest earned on balances, you're getting a credit against your fees. Just the reason why you have to actively manage these is because most invoices in a company go through accounts payable, and this is the one invoice for Treasury that does not, because they're not paying it via check, and they're not validating the prices against any contract rates like you would in accounts payable or through procurement. So that is the one reason Treasury has to actively manage that.
Okay, that makes sense. It's not a sneaky way that the banks do it, but I think it makes sense, right? They have your balances and they're just going to deduct what they're owed, right?
Correct.
And then send you some notes on it. So you should probably be checking up on that. Okay, that makes sense. Thank you for joining me today, Stephanie. And for our listeners, these podcasts, the Coffee Break Sessions, can be accessed every first and third Thursday of the month on any podcast listening service. Thanks and have a great day.
Thanks, Alexa.
This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.